Now, Kubi, we do know that looking, of course, at what's happening with the Naira, we do know that everyone's blaming it, of course, on the fixed income markets. And we're seeing a lot of offshore investors sort of running away from our fixed income markets. Of course, give us an update on this, on the selling by these investors. Are you seeing it slowing down? Are you seeing it sort of becoming better? What exactly is the picture in terms of our foreign investors in the fixed income market?
I think what we're seeing is a steady, it's more like steady and controlled exit. I don't know about running away, but yes, we've seen quite a bit of pullback. But two things have happened. What we had earlier in the year was foreign investors coming into the country, and that tended to drive down the yields on the fixed income, and at the same time it was a good support for the currency. So it's reversed. So it's not so much that it has even stopped, but it's reversed. Maybe because of what's going on in Europe, we're seeing exit. People are exiting positions they took. They tended to take maybe 6 months, 1 year, the longer tenor securities, maybe, and some bonds as well because of the yield pickup. We've seen a reversal of that. So what is happening now is we have investors leaving the country. We're seeing the effect on the exchange rates, although some of that is also from local demand, and we're seeing the effect on the bond yields. Treasury bills are hovering above 14% now across all tenors. We're seeing bond yields as high as 15%, again depending on the tenor.
Now, Kubi, we do know that the federal government did issue about 137.97 billion naira in T-bills, of course, in different maturities at its regular bi-monthly debt auction today. Now, of course, we won't see those results till tomorrow, but what do you expect, or what should we expect, especially now that we continue to see sort of foreign investor interest slowing?
We're expecting to see those yields up. The last, like you said, it's twice a month. 2 weeks ago, we saw yields creep, just a little bit upwards, and we think that's going to happen. We think we're going to see levels above 14% across all the tenors, maybe close to 15, maybe we're not hit 15 yet, but we're seeing a slowdown in demand, and we expect it to reflect in the yields.
Now, we were talking about our currency earlier, Kubi, and we see it's at a 5.5-month low. Now, I did talk to Sam Uche the other day about the Naira, and he said we shouldn't be so worried about seeing the Naira continuing to lose value. What is your take? Should we be worried about this?
Well, we expected this to happen. It was always going to happen. Maybe the one thing we didn't expect was for it to happen so quickly. We thought maybe towards September, towards the end of the year, towards the maturity of the investments, we might see some reversal. It's happened a lot faster than what we expected. Again, we think this is because of what happened in Europe. Are we worried? We're maybe a bit concerned because we're seeing a disparity. For the first time this year, in the last 1 month in May, we've seen some disparity between the levels CBN is giving, 157.4 all in, and the levels we're seeing interbank. We've seen interbank go as high as 163.5. Those are not levels we've seen in 2012. So yes, it's a cause for concern. It's unusual. We wouldn't have expected that kind of fall. But what we also think is that there will be some kind of intervention. We see central bank always stepping in to intervene and control the levels. We don't think the Naira is going to go into a free fall, so nobody should panic. That happened throughout 2011, and we see it repeating itself in 2012.
But about CBN's intervention, Kubi, how much of an effect is it really having? Because if the Naira keeps losing value, then obviously we saw them up their intervention from about $250 million at the WDAS auction to about $300 million. So, I mean, what real effect is the CBN's intervention having if we keep seeing the Naira continuing to get worse?
We've actually seen CBN step up, not the intervention this time, the regular sales. CBN sells, there's a special window which CBN does, that's twice a week, Monday and Wednesday. What we've seen is we've seen the volumes in that window go up from like $120 million per session to current levels of 300. The last 2 sessions we've had, we've seen $300 million on offer, which is more than 50% more in terms of volume. At the same time, CBN also participates in the autonomous market, and that's where the effect is very real, very immediate. Sometime today, during the trading day, the Naira had gone to 163.5. CBN intervened with a significant amount of dollars, and the Naira closed at 160.5, about 160.8. Okay. So that's 2 Naira 80 kobo appreciation just through the effect of the intervention. So we expect to see CBN doing more of that, putting dollars in the autonomous market, the interbank market, which you can trade quite freely.
Now, Kubi, there has been some debate, of course, about Nigeria's bonds losing their luster as a valuable investment. Do the negatives outweigh the positives for you right now? Of course, when I talk about the negatives, I talk about high inflation. Of course, we're seeing slowing growth. Of course, versus seeing things like our foreign exchange reserves increasing. What is your take on the luster of Nigeria's fixed income markets?
It depends on the view you're taking of the market. I mean, if you take last year, CBN says, okay, we're going to maintain the currency in a band of plus and minus 3%. That plus or minus 3%, we're still closer to the, we're not at the peak of the 3% on the devaluation side. So what this means is that the currency probably has some scope to devalue. But if you take it that you look at the level of reserves, you look at where the currency is now, can CBN defend it around that level? They probably can. So it depends on the view you want to take. At 14.5 to 15%, those are still good yields. But again, some of this sentiment is driven more by what is happening back home. Capital protection, maybe you don't want to grow so much risk in Africa when there's still risk on the home front. I think it depends on the view you take of the market.